So, Wall Street just can't stop breaking records right now. On Tuesday, stocks pushed higher again, and the headlines were all about weaker job numbers that could give the Fed more reason to finally cut rates. Hey everyone, it's Wednesday morning, September 10th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. The Dow climbed almost 0.5% to close above 45,725. The Standard & Poor's 500 rose 0.3%, notching yet another record. And the Nasdaq gained 0.4%, marking a second straight closing high this week. Now, the big driver was the Bureau of Labor Statistics, revising job growth lower. Turns out the U.S. economy likely added about 911,000 fewer jobs in the 12 months through March than we thought. That's a much steeper revision than the 680,000 drop economists had expected. Normally these revisions don't get this much attention, but with everyone watching the Fed, this one landed with a bang. Traders are already convinced a rate cut is coming next week. The only question now is how big that cut might be and whether it gives stocks another leg higher. Of course, inflation data could throw a wrench into that story. The Producer Price Index comes out later today, the Consumer Price Index tomorrow, and both will be key for figuring out how far and how fast the Fed can go. Meanwhile, Apple held its annual fall event, rolling out the iPhone 17, the slimmer iPhone Air, and new watches plus heart rate tracking AirPods. Experts are already debating if these updates will be enough to keep sales momentum going, especially after the tariff-fueled buying spree earlier this year. And on the corporate front, DealBuzz sent Tourmaline Bio and Nebius soaring more than 50% each, with tie-ins to Novartis and Microsoft driving those moves. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.